Hello everyone, so this is the continuation of our discussion about absorption and variable costing. Okay, so last time we had presented the income statement under both costing methods. Okay, so we had production of 10,000 but we have only sold 8,000 units. Okay, so last time what we did was we presented or we prepared the income statement using the shortcut method. But students might be wondering, how did we arrive at the cost of goods sold per unit, or at the total cost of goods sold, for example, or the total variable cost? Okay, so let's do the long cut method for this one. And then, for the rest of the problems, we will use the shortcut method. Okay, so in this method, we can you can see clearly how the difference is being shown under these two costing methods. Okay, so let's start with absorption again. So under absorption, again, we have sales. Okay, so sales, so that is 8 times 10,000. I'm sorry, that is 10 times 8,000. Okay, so same, we have 80,000. For the computation of cost of goods sold, okay, so we have to compute the components, the cost of the components individually. Okay, so the components are, we have the direct materials, direct labor, variable overhead, and fixed overhead. Okay, so for direct materials, we have 2.5. Okay, so that is 2.5 times 8,000. Okay, then for direct labor, we have 1.5 times 8,000, number of units sold again. And then for variable overhead, we have 50 cents. Okay, so 50 cents times 8,000. Okay, and then lastly for fixed overhead, we have 2 times 8,000. Okay, now we compute. Okay, so 2.5 times 8,000. Okay, so this is 2.5 times 8,000. Okay, so we have 20,000 for direct materials. For direct labor, we have 1.5 times 8,000. Okay, so we have 12,000. And then for variable overhead, 0.5 times 8,000. Okay, so 4,000. And then lastly for fixed overhead, 2 times 8,000. So this is 16. Okay, then we add. Okay, so 16,000 plus 4,000 plus 12,000 plus 20,000. Okay, so this is 52,000. Okay, so basically it's just the same, no? Okay, so when we compute first the total cost of goods sold per unit, that is 2.5 plus 1.5 plus 0.5 plus 2. Okay, so we have 6.5. Then multiply this by the total number of units sold, 8,000. So that will still give you 52,000. Okay, so for this one, we just computed them individually. Anyway, so the answer should be the same. Okay, so 80,000 less 52. Okay, so we have 28,000 gross profit. Okay, now for selling and admin expense, okay, we have variable again and fixed. Okay, so for variable, this is 40 cents times 8,000. Number of units sold again. So 0.4 times 8,000, we have 3,200. Okay, then for fixed, so we have a total of 6,000. Okay, so it was given. Okay, so of course, we're going to have the same net income. Okay, so the net income is 28,000 less 3,200 less 6,000. Okay, so we have 18,800. Okay, then we do the variable costing income. Ayan. Okay, so sales will be the same. So your sales is still 80,000. And then, we have variable cost. Okay, so variable cost. First, variable manufacturing cost. So these are composed of, this is composed of direct materials, direct labor, and variable overhead. Okay, so this is 2.5 times 8,000 number of units sold. So this is the same. Okay, so we have 20,000. Okay, then for direct labor, this is 1.5 times 8,000. Okay, so still this is 12. Sorry, this is 12,000. Okay, and then for variable overhead, same again, 50 cents times 8,000. Okay, so this is 4,000. Okay, again, this is for the benefit of those who did not get easily, no, the computation that we had last time. Okay, anyway, so when we deduct all these variable manufacturing costs, there's another item. Okay, this is what we call the manufacturing margin. Okay, so manufacturing margin. Then we compute. Okay, so 80,000 less 20,000 less 12,000 less 4,000. Okay, so our manufacturing margin is 44,000. And then when we deduct the variable, there is still another variable cost. This is your variable selling and admin expense. This is not manufacturing cost, but rather this is a period cost. Okay, nevertheless, it is still deducted from your sales to arrive at the contribution margin. Okay, so your variable selling and admin expense is the same also. Okay, so that is 40 cents times 8,000. Okay, so what do we have? This is the same as your variable selling admin expense here. Okay, so this is 3,200. Okay, so we have, after deducting variable selling and admin expense, okay, so this is your contribution margin. Okay, in most of the problems, you will not be asked about the manufacturing margin, so you can directly deduct the variable selling and admin expense together with your variable manufacturing cost. Okay, so to arrive at the contribution margin. Anyway, our contribution margin is, so minus 32. Okay, so we have 40,800. Okay, so what else do we need to deduct? Okay, from contribution margin, we need to deduct the fixed cost. Okay, so fixed cost, however, it is composed of two: manufacturing again and period cost, or the selling and admin expense. Okay, so for manufacturing, 2, okay, times, okay, okay, so what have you learned last time? So it should be 2 times the number of units sold or produced. It should be number of units produced. Okay, so 10,000. Okay, so 2 times 10,000, this is 20,000. Okay, and then for selling and admin expense, given total is 6,000. Okay, so let's compute the net income again. 40,800 less 20,000 less 6,000. Okay, so we have 14,800. Same as what we have computed last time. Okay, however, in this solution, as you can see, for direct materials, okay, 20,000, it's just the same. Okay, under the two methods, direct labor and variable overhead are also the same. Okay, for variable selling and admin expense, 3,200, it is also the same. Okay, so what else? We have the selling and admin expense, 6,000, same again. Okay, so the only difference, I just have to reiterate this one, the only difference lies on the fixed overhead cost or the fixed manufacturing cost. Okay, so under variable costing income or variable costing method rather, okay, the entire 20,000 will be expensed. Okay, regardless whether the entire number of units that we have produced, which is 10,000, have also sold or have also been sold during the current year. Okay, so 20,000, this is what we have incurred for the entire 10,000 units, expensed outright. Okay, in absorption costing, 16,000 only because the 4,000 will be recorded in your inventories. Okay, and then after the inventories have been sold to customers, then that's the time that we're going to recognize that 4,000 fixed overhead to the income statement. Okay, or in the income statement. So that's basically the difference between these two. Okay, so this one and this one. So I have already discussed this last time, but let's just reiterate this for better understanding. Okay. Next, we have question number 2. Okay, so question number 2, using the same facts except that this time assume 10,000 gallons of chemical X were sold. Compute the net income under absorption costing and variable costing respectively. Okay, so I have already placed here all the necessary facts from problem 1. Okay, so we have selling price and then the cost of goods sold component. Okay, as well as your variable selling and fixed selling admin expense. Okay, and then production 10,000 units. Okay. In number 2, however, in question number 2, okay, so we have here 10,000 gallons of sales. Okay, so remember we have 10,000 units of production. Okay, so 10,000, and our sales is also 10,000. So all units that we have produced are or were sold during the year. Okay, so how will this be? How will be the income statement be presented in our or under the two costing methods? Okay, so let's start first with absorption. Okay, so just like what I've told you, we're going to use the shortcut method here. Okay, so for the rest of the problems, we'll use the shortcut method. Okay, anyway, for those who cannot understand this easily, you can still do or you can still prepare the income statements using the long cut method. Okay, so we have the sales again, but this time your sales amounted to how much? So that is 10 times 10,000. Okay, so this is 100,000. Next, you have cost of goods sold. So cost of goods sold, okay, so the components are these 4. Okay, so 2.5 plus 1.5 plus 5 plus 2. Okay, so we have already computed for this one. So 6.5 times the number of units sold, which is 10,000. Okay, so we have 65,000. Okay, so our gross profit is 35,000 pesos. Now, selling and admin expense. Again, for selling and admin expense, we have variable and fixed. Okay, so for variable, this is 40 cents times 10,000. Okay, so am I right? Yes, 40 cents. 40 cents, so this is 4,000. Okay, for fixed selling expense given ang total, so let's just deduct 6,000. Okay, so we have net income amounting to 25,000 pesos. Next, let's compute variable costing income. Okay, so sales will be the same, 100,000. Okay, but we have to deduct the variable cost. Okay, so variable cost, all variable cost, inclusive of the period cost or the selling and admin expense. So let's compute all manufacturing and selling and admin. So we just have to add everything. So this one, 2.5, 1.5, 0.5, and 0.4. Okay, so all of those. So that is 2.5, 4.5 plus 0.4, that is 4.9 times the number of units sold again, which is 10,000. Okay, so we have 4.9, so that is 49,000. Okay, so you can do it mentally. Okay, so what do we have here? We have here the contribution margin. Okay, so just like what I've told you, in most cases, no, manufacturing margin is not being asked. But of course, you know how to compute for it. So contribution margin is 51,000. Next, we have to deduct the fixed cost, which is composed of manufacturing and selling and admin expense also. Okay, so for manufacturing, 2 times, okay, so always multiply this by the number of units sold or produced. Okay, so always produced. Okay, when we compute for the fixed overhead cost under a variable costing, we have to multiply this by the number of units produced, not by the number of units sold. Sir, parehas lang sila. Okay, so if there will be difference between the two, okay, it will be wrong. Okay, you will be wrong in computing for the fixed overhead cost. Okay, so 2 times 10,000, basically this is still 20,000. Okay, 20,000. Next, for selling and admin expense, okay, 51, this is given, okay, in total. So, no need to compute. Okay, so 6,000. 51 minus 20 minus 6, okay? So, 51 minus 20 minus 6. Okay, so we have 25,000 also. Okay, so net income. Okay, so what do you notice? Okay, in this case, 25,000 under absorption and 25,000 under variable costing income. Okay, so they are the same. Why? Because of this. Okay, because of this. Because production is equal to sales, therefore the net income under the two methods are also the same. Okay, so again the difference lies on the fixed manufacturing overhead. When you compute for the cost of goods sold individually, no, per component, you would notice that we're going to use the same. Okay, so we're going to use the 2 times 10,000. Okay, because it is based on the number of units sold. Okay, so that's the difference. Under absorption costing, we multiply the fixed overhead rate by the number of units sold. Okay, unlike in variable costing, by the number of units produced. Okay, so since the production is equal to sales, therefore, the fixed overhead costs that are recognized in the income statement under the two costing methods are the same. Okay, so that's it for the for question number 2. Okay, so let's proceed to question number 3. Okay, of course there is another question. Okay, so number 3, using the same facts except that this time assume 11,000 gallons, okay, of chemical X were sold. Oh, how would this happen if we have it's the first year of operations? That's why we have to assume further that what? It's not first year, okay? Not first year of operations. And okay, because we only produce 10,000, so how come we can sell 11,000? So let's say that there is a beginning inventory of 1,000 units. Okay, so that is an additional assumption. Okay, so how do we solve this one? Again, let's do absorption costing first. So absorption costing, so sales, so this is 10 times the number of units sold again, so 11,000. Okay, so this is probably 110. Next, cost of goods sold, so deduct cost of goods sold. So again, these 4 components, so 6.5 times 11,000. Okay. So how much? 6.5 times 11,000. Okay, so we have 71,500. Okay, sorry, I was not able to change the color. Okay, anyway, so we have gross profit amounting to, so less 100, okay, less 71,500. So this is 38,500. Okay, less selling and admin expense. Okay, so we have variable and fixed again. So for variable, okay, so we have 4 cents. Okay, 4 cents times the number of units sold again, so times 11,000. And then for fixed, it's given 6,000. Okay, so how much? 0.4 times 11,000. Okay, so we have 4,400. So your net income under absorption costing amounted to, let's see, 38,500 less 4,400 less 6,000. Okay, so we have 28,100. Okay, so what about under variable costing? So under variable costing, sales will be the same. Okay, so we have 110,000. And then variable cost. So variable cost, manufacturing, and selling admin expense. So again, same. So that is how much? Okay, so this 3 plus this 1. So that is 4.9. Okay. Times 11,000. Number of units sold. Okay. So 4.9 times 11,000. Okay, so we have 53,900. Okay, again, this is your contribution margin. Okay, so less 53,900. Okay, so this is 56,100. Okay, what else? Okay, so we have fixed cost, manufacturing, and selling and admin expense. So same again, 2 times the number of units produced. Okay, so 10,000 always. So this should still be 20,000. Okay, next, selling and admin expense. For selling and admin expense, you have 6,000 again. Okay, so how much is your net income? So 56,100 less 20,000 less 6,000. Okay, so we have 30,100. Okay, so as you can see, again, there's a difference because there's a difference in production and sales. So here, production is 10,000, but your sales totaled 11,000. Okay, so definitely mas mataas ang sales, and therefore we have higher net income under variable costing. Why? Again, this is due to the recognition of fixed overhead cost. Okay, in fixed in variable costing, 20,000. Okay, so 20,000 is our fixed overhead cost always. So always 20,000. That's it. For absorption costing, no, it's not 20,000, no. Okay, so what do we have here? Okay, when you compute this individually, okay, 2 times number of units sold always, okay, under absorption. So you will have around 22,000. Okay, so for this one, 22,000. This is your FOH. Okay, so there is a difference of 2,000. So that's solely because of the fixed overhead cost. Okay, so in summary, class, okay, so we have production. Okay, so we have production. I'm sorry. So production, if it is greater than your sales, your absorption income is likewise greater than your variable costing income. If production is equal to your sales, then your absorption costing income is the same as your variable costing income. And lastly, if your production is less than your sales, then your absorption costing income is likewise less than your variable costing income. Okay, so this is your question number 1. This is your question number 2. And then this is your question number 3. Okay, in most problems, especially in exams, okay, so there will be one problem, but you will be asked to compute for the net income under the two costing methods. Okay, so to save you some time, all you have to do is to compute for the one that you are more sure. Okay, you are more sure of your answers. Okay, so let's say we are more sure. Okay, there's such term, no? If we are more sure, okay, of our answers under variable costing income, then we can start or we can solve the net income under variable costing income. Okay, so let's say variable costing. Okay, let's say for this question number 3, okay, so our variable costing income, as we have computed, amounted to 30,100. Okay, then we are also asked about the net income under absorption costing income. So how are we going to reconcile? Okay, so how are we going to compute for absorption income, or how do we determine the income under absorption costing without doing this one, without doing this, all of this? Okay, so remember that the difference lies on the fixed overhead cost. Okay, and it's because of the difference in production and sales. Okay, so the reconciling item would be like this. So plus or minus change in inventory times the fixed overhead rate. Okay, as easy as that. Sir, how do we compute for the change in inventory? Okay, you can compute for the change in inventory. This is actually very easy. This is the difference between your production and sales. This one. Okay, so that's the difference. That's the change in inventory. So the difference between the two. You don't have to change the sign. Okay, so production less sales. Okay, so let's solve this one. Well, how much is your production in question number 3? Our production is still the same, 10,000. Okay, 10,000 minus 11K. Okay, times, what is our fixed overhead rate? Okay, our fixed overhead rate is 2. Okay, so that is times 2. So 10 minus 11,000, that will give you negative 1,000. Okay, negative 1,000 times 2, that is negative 2,000. You just have to retain the sign. So if it's negative, then that's it, negative. So 30,100 minus 2,000. So this will give you 28,100. Okay, so what you can see, we have the same answer. Okay, sir, what if I am more comfortable in answering absorption costing income? Then you can just still the same. Okay, you just have to work it back. Okay, so 28,100. So instead of subtracting it, you just have to divide it. You just have to add it. So 28,100 plus plus 2,000. So you will have 30,100. So that's how you reconcile. Again, how are you going to compute for the change in inventory? That's simply the difference between sales. Okay, so let's see. Let's reconcile question number 1. Okay, let's see if we're going to have the same answer. Okay, Okay, so this one. Okay, so let's assume in this case we are more comfortable in answering absorption costing income. Okay, so variable costing again, absorption costing, so plus or minus. Okay, so here change in inventory again, change in inventory. Okay, so change in inventory times fixed overhead rate. Okay, so change in inventory, that is simply what? Production less sales. Okay, so our production here is still 10,000. Okay, so 10,000. Okay, so ito production, but our sales is 8,000 only. Okay, then multiply this by 2. Okay, so absorption costing income, let's assume this is the first one that you have computed. Okay, so you have to determine also the variable costing income. So this is the formula. 10,000 minus 8,000, that is positive 2,000 times 2. So that will give you 4,000. Okay, so work back. So 18,800, instead of adding 4,000, we have to deduct it. So 18,800 minus 4,000, and that will give you 14,800. Okay, so basically same here. Okay, so they are the same, 14,800. Okay, and for question number 2. Okay, so what about for question number 2? There is no difference. Why? Okay, because production is equal to sales. So that's it for problem 1. Okay, sorry, one more thing. For change in inventory, sometimes production and sales will not be given, but you can still compute for the change in inventory. Sir, how? They proceed to the inventory units themselves. Okay, so you will be given with beginning and ending inventory. So let's say your beginning inventory totaled 1,000. Okay, then your ending inventory is 3,000. So for the change of inventory, of course, ending inventory less beginning inventory. So this will be your formula. Okay, so there is an increase of 2,000. So it means the sign would be positive. Okay.